Hi everyone, welcome to LSBF TV. My name is Ridwana Uddin and I'm going to be working through the assessments today for Level 3 Financial Accounting Preparation. We are going to be going through assessment tasks for each of the next 10 weeks and we're going to give you the confidence that you need to go away and attempt such questions yourself to be ready for your real exam. Today we're going to be working on one of the assessments, and this is reconstructing general ledger accounts. We need to understand the difference between controlled accounts and the individual customer and the individual supplier accounts. We're going to be also looking at the issue of books of prime entry, and we'll discuss the examiner's reports and comments needed to make sure we understand where the weakness students are and the strong students are. Okay? So let's make a start on this task. There we go. This task is about reconstructing general ledger accounts. You are working on the accounting record of a sole trader for the year ended 31st of March 17. The business is VAT registered. If you are VAT registered, it means you can claim a refund on the tax that you pay on your purchases and other relevant expenses. We've got the following information: the daybook summaries. We've got 4 daybooks. The first daybook is known as the sales daybook, and the sales daybook records invoices sent to customers. I'm just going to shorten it because I can't squeeze it in there. Invoices sent to customers. So if your customers buy goods from you on credit, it means they've taken the goods home with them today and promised to pay you at a later date. The total amount of goods will represent the amount that your customer owes you, but the VAT amount is the amount that you collect from the customer, and that is going to be payable to HMRC. The net amount will be the amount that you will record as your sales. And that's a description of the sales daybook. Another book of prime entry is known as the sales returns daybook, and the sales returns daybook records credit notes sent. And credit notes represents the amount of money that the customer no longer owes you, because maybe the customer has sent goods back to you, or because they've changed their mind, or you've supplied them with damaged goods. If we issue the customer with a credit note, it means they owe us less money, so the amount that we expect to receive will be reduced. In the total amount is the total amount that we don't expect to receive anymore, but the VAT amount, that will be the amount that is no longer payable by the customer and no longer due to HMRC. The purchases daybook will record invoices received from our credit suppliers. And these invoices will represent the amount due to our credit suppliers. If you buy goods on credit, it means you've taken the goods home with you today and promised to pay the supplier at a later date. So the total in that book of prime entry will represent the total amount that you owe the supplier. But you'll also pay the supplier the £24,408 VAT, and this is going to be included in the total amount. If you pay VAT on your goods purchased, you can claim that back from HMRC. So the VAT element is so important that we get right, because that will be taken to the sales control account, the sales tax control account. The purchases returns daybook, this records credit notes received from our credit suppliers. And if we receive credit notes from our suppliers, it means that we owe our supplier less money. But in this situation here, we're told that purchase returns, there are no entries in this book of prime entry. So the amount that we owe our supplier will not be reduced for this particular task. VAT on discount has been correctly adjusted in the purchases daybook. Okay? And we've got the following balances. Balances at the 31st of March 16 and balances at the 31st of March 17. March 16 will be the balances brought down, whereas March 17 represents the balances carried down. So we have here our opening balances and our closing balances. And because the examiner is testing us on reconstructing general ledger accounts, we will definitely need to know what amount we start off at the beginning of the period and what amount we should end up with at the end of the period. So we've got trade receivables, trade payables, closing inventory, VAT, and the bank balance. Trade receivables represents the amount our customers owe us. Trade payables represents the amount that we owe our suppliers. So you need to think about what kind of things would increase the amounts that our customers owe us money for. It could be any sales that we've made on credit. It could mean any bounce check or dishonoured checks that the customer has dealt with. It could also include any interest due on overdue accounts. If you charge your customers interest for any payments of after the invoice date, then this could mean that you're saying to the customer, you owe me 1% of the invoiced amount after each day you have delayed your payment. So if you do charge interest, it means the customer owes you more money, so this will increase the amount of receivables. What could reduce the amount of receivables? If you reduce the receivables, it could mean either you've received some cash from the customer or the customer has returned some goods to you. But also it could mean that the customer has suffered an element of irrecoverable debt and therefore you no longer expect to receive that money from them. It's all relating to things that will increase your receivables and things that will reduce your receivables. Now the examiner's report does state that these opening and closing balances may or may not be given to you and you may have to find any missing figures. A lot of students did perform very strongly in this assessment task, but majority of the students did gain full marks. We need to understand which correct figures will relate to the particular amounts. Will it relate to payables or will it relate to receivables? And it's also testing you on your ability to bounce off or balance off your ledger accounts correctly. And also you could be dealing with adjustments to the VAT account, adjustments to trade receivables, adjustments to trade payables, or even the bank account. Now let's talk about things that will impact our payables. Payables represents the amount that you owe your supplier. So what could increase the amount that you owe and what could reduce the amounts that you owe them? If you buy goods on credit, it means you owe the supplier more money. But if you pay your supplier some cash, if you return goods to your supplier, if there are any relevant contra or setting off entries, these could reduce the amounts. So it's very important you read the question very carefully. For closing inventory, you've got the opening inventory balance and you've got the closing inventory balance. Opening inventory represents the amounts that you've brought forward from the previous accounting period, and it will be a part of your cost of sales expense because throughout the period that's just begun, you could be selling goods from the opening inventory value. Closing inventory represents the amounts left unsold at the end of the period, and closing inventory will be an adjustment that you make in the cost of sales expense as well as being shown on the statement of financial position under current assets. With the VAT amount, this could represent the amounts that you owe HMRC and the amounts that you can claim back as a refund. The VAT account will either be a credit balance or a debit balance. A credit balance means that you have an opening liability. Okay, so I can type that in there. This represents an opening liability. So at the start of the period, you owe HMRC £1,806. And it could mean that you're buying goods, selling goods, paying for expenses. So many transactions will impact the VAT account. If you claim some items back as a refund, this will reduce the amount due to the tax authorities. But if you increase the amount that you have to pay them, that will increase the liability. So it's all about things that will increase the elements and reduce the elements. And then we've got the bank account. The bank account will either have a debit balance or a credit balance. If the account represents a debit balance, it means we've got a positive bank balance. And a positive bank balance means that we have money in the bank. If you're dealing with a credit balance means that you're in an overdraft balance, which is a negative bank balance. So you have to read the question very, very carefully. And if you read it carefully, you can answer the question set. And this proves to the examiner that you're able to get 90% on this and you can progress to your other AAT papers. It's all about being successful and showing the examiner who's boss. You've got the confidence, so you can do it. Okay, guys? So, reading on, we've got further bits of information. The net amounts for general expenses, the VAT amount and the total amounts. General expenses are not processed through the purchases daybook. So the examiner is telling you here that purchases relates to buying goods in order for you to resell them to your customer. But general expenses can relate to goods that you haven't bought. Examples could be stationery expense or any other office expenses. The £9012 was posted to the general expenses account, and all VAT on these expenses is recoverable. So if your VAT is recoverable, this means you can claim back as a refund from HMRC. And if you can claim these back as a refund, it means this will reduce the amount that you owe the tax authorities. So the examiner is being very generous here, giving you all of the information you need to build the VAT control account. The next bullet point, cash sales of 4,200 were made excluding VAT at 20%. Okay. The total banked was posted to the cash sales account. So if you bank your cash, it means you're receiving cash in hand. And sometimes keeping large amounts of cash is not safe. There is a risk of theft or any fraudulent activities could go on. So what you can do is put that amount of money in the bank account, and that's the phrase that we refer to, banked. If you make cash sales, you're going to be charging VAT on the goods that you sell. So the 4,200 here, ladies and gentlemen, is representing the net amount. So to get the total amount you received from your customer, you would do the 20% on top of 4,200. The next bullet point, all purchases are made on credit terms, which means that you've bought the goods on credit, taken the goods home with you today, promising to pay the supplier at a later date. And then we've got the trader took advantage of prompt payment discounts were never offered. So we have always taken discounts if the supplier has offered them to us. Okay. So now that we've read through the question very carefully, let's move on to the next page. We've got receipts and payments recorded in the bank account. Amounts from credit customers. Amounts from credit customers, this is money coming in. If your customers pay you some money, this is known as receipts. So this is money coming into the bank account. The next line we've got is amounts to suppliers. This means money is paid to your suppliers. So it's money going out. If the money is going out, this will reduce the bank balance, but it also reduces the amount that you owe your supplier. So it's all about perspective, ladies and gentlemen. Amounts banked from cash sales. So amounts banked from cash sale, this is money increased in bank. So the amounts of money that you took from your cash in hand, you put that into your deposit account. We represent that as amounts being banked. We've got then loan receipts. So you've borrowed money, and if you receive the money, this will go to the bank account. Rent paid. If you pay for your rental expenses each period, this will reduce the amount in your bank account. General expenses. Remember, we're told the total general expenses was 9012. And we've got HMRC for VAT payment. So you have paid some money to HMRC. So payments made to HMRC. So every time you make sales, you could be collecting some VAT amounts due to the tax authorities. And if you pay the tax authorities, this is a payment. Very nice, very easy. I'm trying to explain the terms here, so it makes it easy for you to go away and try such questions yourself independently. We've got drawings, 23,000. Drawings represents cash or goods taken out by the owner for personal use. So this will probably reduce the amounts in the bank balance. And we've got wages. Wages represents the amounts that you have paid to your employees. And wages is also covered in one of the level 3 papers, and it's very important that you are able to calculate the wages expense and the total amount due to the employees and the tax authorities. So amounts from credit suppliers, this is money going into the bank. Amounts to suppliers is money leaving the bank. Amounts banked from cash sales, this is money increasing in the bank account. Loan receipt, this is money increased in the bank account. Rent paid, this is money leaving the account. General expenses, money leaving the account. HMRC VAT payments, this is again payments made, that's money being left. Drawings, money left. Wages, money left the account. So this task is all about identifying the movements in the amounts and how it's going to impact either the trade receivables account, the trade payables account, the VAT control account, and the bank account. So part A of this question is for 5 marks. It says, using only the figures supplied, find the missing discounts figure. Okay, find the missing discounts figure by preparing the purchaser's ledger control account for the year ended 31st of March 17. And this is for 5 marks. It says, fill in the grey boxes using relevant items from the list below. Now here, we haven't generated a drop-down list, but we've shown you exactly, explicitly, which options that you would see from the assessment tasks. To show you all of the options is a great way to see quickly which items you should be selecting. If we can do this now, in 5 minutes, you should be able to do such things in 2 minutes in the real exam, because you would see a similar question in the actual assessments. Okay, so your missing figure is discounts received. But the examiner is asking us to fill in the items from the purchaser's ledger control account. The purchaser's ledger control account represents liabilities, the amounts due to your supplier. So we need to build this T account, and the examiner will also be testing us, are we able to balance such accounts and find the missing figure for discounts received? Okay, so we start off with the credit side, which will show our balance brought down. The balance brought down is the amounts that we owe a supplier at the start of the period. And the examiner has given us the amounts for balance brought down, and this is to be 13,354. So trade payables, the amounts that we owe at the start of the period is 13,354, and this is your balance brought down. 13. Okay. Now we go through this scenario and find out the missing figure for discounts received. If you receive a discount from your supplier, it means you owe them less money. So any discounts received would have made its way onto the debit side of this T account. We've been given options, and the option here, discounts received, is one of the items that I will select from the drop-down list. And this is the missing figure. I'm just going to put a question mark there to remind me that you need to calculate this. Now, I'm also going to enter the balance carried down. The balance carried down is going to make its way to the debit side because it will be brought forward to the next accounting period on the credit side. So balance carried down, this was given to us in the information on the previous page. There we go. It says the balance brought down at the end of the period is 14,656. 14,656. That is how much we should be owing our suppliers at the end of the period. $14,656. Now that I've dealt with the opening and the closing balances, I've identified my missing figures, discounts received. Now I have to go through the amounts given to me, receipts and payments recorded in the bank account. And this will allow me to identify how the purchase ledger control account balance would change. So at the top of this page, ladies and gentlemen, I'm going to select balance brought down, balance carried down, so they have been ticked off. Now I go through the items. Because we're dealing with a purchase ledger control account, is everything relating to suppliers. So things relating to suppliers will be amounts to suppliers. Okay? And it will also be relating to the amount that we've bought. The amount that we've bought is going to be shown in your books of prime entry. And the books of prime entry relating to suppliers is purchases and purchases returns. Purchases means the goods that you've bought, purchases returns, goods that you've sent back. Because you haven't sent any goods back to the supplier, we're going to ignore that line and just continue looking at the purchases line. Purchases, the amounts that you have bought from your supplier, gave you a total amount of 149,348. This means that you owe the supplier this amount of money. 149,348. So we've got purchases daybook 149,348. Okay, this increases your liability, so this must be shown on the credit side. So I tick off purchases daybook. Now on the debit side, we are going to be showing bank. The bank is going to represent the amount that we paid our suppliers. And if we pay our suppliers some money, it means that we no longer owe them as much. So the liability is going to come down by 145,137. So 145,137, which is the bank. $145,137. So all there is left to do, ladies and gentlemen, is to find out the discounts received amount. To find this, you grab your calculator and add down the credit side and put that total in the totals bit there. 13345 plus 149,348 gives us 162,693. 162,693. So this means that total must be 162,693. Because the balance carried down is on the debit side, it means the credit side should have been the higher total. So that's 162,693. So the discounts received plus the bank 145,137 plus 14656 should all add up to 162,693. So the discounts received is going to be, let me just rub this bit out here. The discounts received should be 162,693, take away 14656, take away 145,137. And that's going to give me £2,900. £2,900. And there you have it, guys. This assessment is trying to find missing figures from the examiner's information given relating to a particular control account, VAT account, or the bank account. It's important that you take away what you've learnt in this session and apply it to similar questions. Why not go to your AAT study books, any tutorials that you've got and attempt similar questions. If you do get stuck, then you're more than welcome to email your tutor, and they are there to help you along the way. The tutors here at LSBF are aiming to answer as many homework questions as possible and give the student with constructive feedback. Just like the examiner provides feedback, I can talk to you about things that students found difficult in this particular assessment. We have the calculation of bank balances, so it's very difficult for students to identify the amounts coming in and the amounts leaving, but also make sure that you identify, do you have a positive bank balance or do you have a negative bank balance? We need to ensure that the amounts due from the amounts due from customers are not confused with the amounts due to suppliers. So you can have receipts or you can have payments. The missing figure in this situation was discounts received, but it could also be missing for purchases amounts. We've got the bank amounts and we've got the balance carried down or the balance brought down. Any of these items could be missing, and this could relate to your sales ledger control account, your VAT account, or the bank account. Make sure that you are also making the entries dealing with accruals and prepayments. Accruals and prepayments are regularly tested in any of the financial accounting papers at level 3. So it's up to you to ensure that you place things on the correct side of the accounts and making sure you balance the accounts correctly. I really hope that you enjoyed this session and you learned something and you can take it away to apply it to any questions that you can do. Please make sure that you understand that us tutors at LSBF are committed to ensure students succeed. Thank you very much for joining me. I'll see you next time where we will do another Level 3 Advanced Bookkeeping. Thanks.